Welcome to the August 1st, 2022 Advance Report from McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, with your weekly fast-paced tour of the global financial markets. Be sure to subscribe. This broadcast by McGowan Group Asset Management, a team of 10 serving affluent clients with dedication, and this is proof that we want our clients to make great decisions. Each week we bring you the videos with fresh charts, research, and the graphs, and boy howdy, what a huge week for news it was. We're going to get to the Federal Reserve, but while everybody was whining about recession, Federal Reserve, and inflation, something extraordinary happened. We're going to cover in this week's longer program, the Apple podcast, NetWorthRadio.com, the difference between an economic contraction and what we call a stealth recession. So, we've got important projections that have to do with what you and I should be doing as investors between now and the end of 2022. This is shocking. I was shocked when I saw it. So, 277 companies out of the S&P 500 have reported earnings. And this tells you the different industries, but look at this. With ExxonMobil reporting over $17.5 billion in profit in a single quarter, the earnings growth is now a positive 6% over last year. In other words, if you look at the S&P going down 20% or more through June 15th, then rebounding about 7 or 8%, why was there a rebound? As it turns out, companies are actually making more money than last year. And the energy complex just started to report earnings. This next week, we hear from the pipeline companies and the other smaller oil companies. Now, this is that S&P decline that I mentioned, falling as low as 3636. We're using the S&P this week. The Dow rebounded this week to 32,700, even though the Federal Reserve cut rates. And that earnings grid is one of the reasons that you saw that rebound. Look right here. You're up 12% from the June 15th lows. And yes, the video from just a couple of weeks after this low was called Bottom with a question mark, because it looked like the height of pessimism. And you could see it in the bounce back here, that pessimism was overly too pessimistic, we'll say. Look at this, S&P earnings. Now back in 2018, earnings hit $40 per S&P unit per quarter. And it didn't rise substantially above that until we got into the 2021 timeframe. There's the pandemic. Now, what's the projection? Well, consistent with what you just saw, this is an increase projected for S&P earnings that is nearly 30% over the next 2 years. That's a wow. Now, these analysts tend to be overly optimistic, but that forecast is actually gone up, not down. This is the Fed funds rate. Now, what's going to happen on the interest rates? This is going to 3.25%, maybe 3.5%. Federal Reserve projected to hike rates from the base level 2.5% where they are now, maybe by 1%, and then to come back down. There are some Fed projections, I think, that are quite shocking based upon the difference between these projections and the overly negative headlines that you're seeing. All right. Fed funds rate, this is a Federal Reserve meeting, and they post their forecast for the years ahead. For the next 3 years, they're saying real economic growth at about 1.8%. Well, that's anemic growth, but it is not the recession that we keep hearing about. Unemployment rate may rise to 4% from a historically low 3.5%. Inflation comes down to below 3% next year. And the commodity graphs we showed you a couple of weeks ago, those showed that from the Ukrainian peak in commodities, you've had substantial decreases. Lumber, wheat, and other commodities have come way down from their spike in the first half of this year. So the July numbers for inflation will be important. That comes out in mid-August, and we'll bring you the updates on that. This is the 10-year interest rate going from 3.5 down to 2.7 now. Why would that rate come down if interest rates are going to spike relentlessly? The bond market is convinced, yes, that growth will slow down, inflation will slow, and the treasuries actually went below the Fed funds target. It's a type of inversion. Does it mean recession? Not necessarily so. This was the 2018 Fed tightening cycle, and then they came back down, obviously aggressively in the pandemic. However, what you see at 3.5 is the markets have already built in that potential increase. If they do less, that would actually be positive, good news. And when we go forward from here, what we're going to see is actually that earnings and real company profits are going to drive the market instead of being whipsawed around worrying about inflation. I'm Spencer McGowan, your financial weatherman. Thank you for tuning in, and you can find us at networthradio.com to set your time for a brainstorming session at the Crescent. Thank you for tuning in to Net Worth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.